Hello, it's Brian Rezny. It's question and answer day. And one of the questions that have come up, it really is around these equity index annuities. These are the ones that are sold by so-called advisors who are really salespeople. And what's interesting, I recently had somebody that came to our office, a couple, that was sold a couple of these equity index annuities. And what they were told or what they believed they bought is factually not true. And let me just explain a little bit how these things work. When you get involved in an equity index annuity, not only are there expenses involved that come against your return, but you usually have surrender penalties that last 10 to 12 years just to get all of your money out. Equity index annuities are designed really as a more conservative investment that really will produce, if you're lucky, 1 to 1.5% annualized returns over a rolling 10-year time frame. That is it. If you believe that you're going to make more than 1 to 1.5% return on your money by insanely locking up your money into an equity index annuity, you're sadly mistaken. There's cost structures, there's caps, there's spread fees, there's costs for the indexes they use. They are very complicated instruments. So people ask me all the time, well, if you're an ultra-conservative investor and you don't want to lose money, what should you do? Go to the bank and buy a CD. A CD is going to pay you probably a better rate of return over a rolling 10-year time frame than an equity index annuity. The big difference is you'll have instant liquidity of your money and full FDIC coverage by the U.S. government. You're not going to get that on an equity index annuity. So again, if you think you're going to make some magical great return on an equity index annuity, you're not going to. Go to the bank, buy a CD, you'll be a happier camper. If you believe income for life that comes off of these annuities is a good deal, it's not. The average equity index annuity, if you're age 65, will take you 20 years if you turn on that income spigot, that income for life. It'll take you 20 years to get your own money back. Not growth of your money, not return on your money, but return of your own money. Your own money. It took you 20 years to get it back. So what that means is this: you'll get the same money for 20 years. No inflation, no growth, and it's your own money. These things are sold for one reason only. So-called advisors sell them to unsuspecting investors who haven't done their research, unfortunately, for gigantic commissions paid to the so-called advisor. That's it. If you've been sold any annuity, whether it's an equity index annuity, a variable annuity, or something in the middle, annuities ultimately are just garbage investments that have layers and layers and layers of cost structure that work against your return and insanely lock your money up. Don't do it. If you've been taken to the woodshed, bamboozled, sold one of these crummy investments, and your portfolio is $500,000 and larger, and you want a real money management firm to manage your money properly, call our firm for a consultation. We'd love to help you. There's ways that you can mitigate cost structure, maybe get out of those annuities, but holding these things until surrender penalty time happens is ultimately going to cost you even more money in your retirement. We've seen a lot of carnage in 30 years of investor being sold these products. Don't let it happen to you. Call Rezny Wealth Management for a consultation. Again, if you're looking for money management services, we'd love to help you. Have yourself a safe and profitable day.